How is the retail investment landscape changing? And what does it mean for both investors and local economies? Welcome to the Commercial Real Estate Insights podcast. I'm your host, Steve Hamoen. Let's get right to it. In a recent development reported by the Orlando Business Journal, Eden Family Properties, a firm based in the Midwest, has completed a significant acquisition in Orlando, Florida. They have purchased 3 commercial retail buildings, marking a substantial move in the region's growing retail investment market. This acquisition highlights the increasing interest and confidence investors have in Orlando's commercial real estate sector, particularly in retail. The purchase by Eden Family Properties is a multi-million-dollar deal and is part of a broader trend of retail investment activity in Orlando. As the city continues to expand, it draws both national and international investors looking to capitalize on its growth. This transaction is expected to contribute positively to Orlando's local economy by potentially increasing job opportunities and enhancing the retail landscape. While this development unfolds in Orlando, it's interesting to consider the retail investment climate in Ontario, Canada, particularly in regions like Kitchener, Waterloo, and Cambridge. These areas have seen a steady growth in retail investments, although not at the same pace as Orlando. The cross-border relevance of such investments is significant, as Canadian investors may look to diversify their portfolios by exploring opportunities in thriving American markets like Orlando. In a significant move for Jacksonville's urban landscape, a major land swap has been approved, facilitating the development of a $300 million University of Florida campus downtown. This project is not just about expanding educational facilities, but also includes a new luxury development along the riverfront, which promises to enhance the city's appeal both for residents and potential investors. According to Leah Foreman from the Jacksonville Business Journal, this development is expected to revitalize the area, bringing more business opportunities and potentially increasing property values. The land swap with Gateway Jacks is a strategic decision that aligns with Jacksonville's broader goals of urban development and economic growth. By paving the way for the University of Florida's new campus, the city is positioning itself as a hub for education and innovation. This move is likely to attract more students, faculty, and visitors to the area, thereby boosting local businesses and the real estate market. When we look at similar urban development initiatives, cities like Kitchener and Waterloo in Ontario have also been focusing on integrating educational institutions with urban planning to stimulate economic growth. These Canadian cities have seen positive impacts on their local economies by fostering environments where education, business, and residential life coexist and thrive. Such developments can serve as a model for Jacksonville, highlighting the cross-border relevance of educational and mixed-use developments in urban centers. The Eden Prairie local news reports that city officials in Eden Prairie are taking proactive steps to influence the redevelopment of the Danfoss industrial property, located along State Highway 5, for multifamily residential, retail, and office uses. The nearly 60-acre site, which Danfoss is selling, presents a unique opportunity for the city to transition from its industrial past to a mixed-use future. However, Danfoss officials have expressed concerns that the city's vision could limit their ability to sell the property for industrial purposes. Danfoss, a Danish engineering company, announced earlier this year that it would close its Eden Prairie plant by the end of 2025, displacing 110 workers. The company plans to shift some operations to its Plymouth facility. The move has prompted the city to consider changing its long-range comprehensive guide plan to reflect future mixed-use development, a change endorsed by the Eden Prairie Planning Commission in a 7-1 vote. However, the change still requires approval from the City Council and the regional planner for the Twin Cities, the Metropolitan Council. Dave Neuberger, Danfoss's head of real estate for the Americas, has voiced concerns that the city's proposed changes could deter industrial buyers, potentially impacting the property's value and Danfoss's ability to sell it. Neuberger argues that maintaining industrial use options is crucial for both the existing plant and an adjacent undeveloped parcel that could support future industrial development. The city's Director of Community Development, Julie Klima, emphasizes that the guide plan change is not a guarantee, but a strategic move to align future development with community needs and feedback. While the largest Danfoss building might continue its industrial use, the city envisions the rest of the property transitioning to mixed use, including potential affordable housing. This change aligns with the city's goals of adding affordable housing and destination retail, especially given the property's proximity to the Southwest Station transit hub. The proposed mixed-use designation could allocate approximately 33 acres for residential use, 11 acres for commercial or retail, and 5 acres for offices. The potential development could bring nearly 1,889 residential units, over 95,000 square feet of commercial or retail space, and over 43,000 square feet of office space, according to city planner Jeremy Barnhart. Nate Erickson, a principal and senior vice president at Transwestern's Minneapolis office, notes that Danfoss is under contract with a buyer for the entire property, but no formal redevelopment plans have been submitted to the city. He warns that the guide plan change could delay the property's full utilization, affecting its price and costing Danfoss millions. This situation in Eden Prairie mirrors the challenges faced in cities like Kitchener, Waterloo, and Cambridge in Ontario, Canada, where industrial sites are often eyed for redevelopment into mixed-use projects to meet growing residential and commercial demands. As cross-border investment strategies evolve, understanding these dynamics can offer valuable insights for investors looking to capitalize on similar opportunities. In an intriguing development in Seattle's real estate market, construction has begun on a rare office-to-residential conversion project in the Lower Queen Anne neighborhood. This project, highlighted by the Puget Sound Business Journal and reported by Mark Stiles, involves transforming a 1980s-era office building into 74 apartment units. The developer mentioned that the more he examined the opportunity, the more logical it seemed to proceed with the conversion, aligning with broader trends in urban redevelopment. This type of project reflects a growing trend where cities are reimagining underutilized office spaces as residential properties to meet the increasing demand for housing, especially in urban centers. Such conversions not only address housing shortages, but also revitalize neighborhoods by bringing new residents and potential business opportunities. The King County Assessor's Office is involved in this project, ensuring that the transition aligns with local development goals. Interestingly, this mirrors initiatives in cities like Kitchener, Waterloo, and Cambridge in Ontario, Canada, where the focus is also on adapting existing structures for new uses to meet evolving urban needs. These Canadian cities have been successful in transforming former industrial and commercial sites into vibrant residential and mixed-use communities, demonstrating the cross-border relevance of such urban redevelopment strategies. As the Seattle project moves forward, it will be fascinating to see how it impacts the local real estate market and community dynamics. It serves as a potential model for other cities looking to optimize their real estate assets in response to shifting market demands. By converting office spaces into residential units, cities can address housing challenges while also preserving the architectural heritage of existing buildings. Thank you for listening to the Commercial Real Estate Insights podcast. I'm your host, Steve Hamoen. See you on the next one.